Monday, March 24th, 2020, Maneco 64, home of alternative economics and contrarian views. March 23rd, 2020, yesterday, a day that will live in monetary infamy. The Federal Reserve declared that they will print unlimited amounts of credit or money, fiat money, in order to support the financial markets. Yes, so it's QE to infinity, QE to the max. They declared war on the currency, your currency that you use, not only in the US, but for the whole world, seeing that the petrodollar is the reserve currency of the world. So they declared war on the dollar. Of course, it's a paper dollar. We all know that the dollar is a weight of silver, fine silver, according to the Constitution, 371.25 grains of fine silver. We also had the day before on 60 Minutes, ex-Goldman Sachs employee, Neil Kashkari, now president of the Minneapolis Fed. He declared that the Fed has unlimited amount of cash, that the banks are safe. They can create as much as they want. So crazy times. That's what I'm going to talk a little bit about today, how the market reacted, where we are right now this morning here, London time. Before I go further though, you can see that Billy is back. He doesn't sleep all the time, as you can see here. He was out this morning already in the garden, enjoying himself and running around. Yes, Boris Johnson, the Prime Minister here in the UK, yesterday declared, I think at 8:30 p.m., that we are under lockdown. So we can only get out of the house now for basic necessities, to buy food, fuel, to medicine, and that's it. You can't, or you can go out to for a walk with your dog or exercise, but you can't go to other people's houses unless there's someone that needs care. So I think personally this is exaggerated. I spoke in my live stream on Sunday about this calculation I did, and I'll go through it again just to give you an idea of how I think this is being exaggerated, this crisis. So if you look at statistics, 150,000 people normally die every day in the world. So you multiply that by 59 days. And this calculation, I did that for this Sunday. Now it's changed, of course. You multiply that by 59 days. That's almost 9 million deaths we've had in the last couple of months, or 59 days from Sunday. While this beer virus, whatever you want to call it, in the last 59 days from Sunday, we had about 13,000 deaths. So as a percentage of that, it's less than 0.2%. So just put that into perspective. The other thing I wanted to reference to you is a video I watched yesterday. I subscribed to this guy's channel. He's got very few subscribers, very few views. You might not be into the Bible, and I will be honest with you. We have Bibles at home. I was brought up as a Catholic. My parents were not churchgoers. This is a very interesting video. And he's based in the UK. YouTube channel is called Simple Truth. He's only got 93 subscribers, and I'm one of them. But he made a really interesting video yesterday, and I'll put it up in the cards. And I kind of agree pretty much with what he's saying about this crisis and what it's all about. Some of you might not be interested. Some of you might be. It's 41 minutes long. Nowadays, with so many people on lockdown, I don't know where everyone is, of course, what your situation is. We got a bit more time to listen to these things. So Have an open mind, I would say, and listen to him. He's not a preacher. He's just going through the book of Daniel in this case, which is really interesting in relationship to this crisis. So let's look at the market this morning. It's 8 a.m. London time. Yesterday, the Fed announced unlimited QE, of course. They're going to be buying even corporate bonds now. And they announced that they're buying, I think, 625 billion just this week of treasuries and mortgage-backed securities, which is amazing. I did the calculation, and they're probably not going to do it every week, but if they did, it would be 32.5 trillion new money into the system. Don't forget, the US economy is about 22 trillion. So yeah, 8 a.m. yesterday when they announced it, the markets hadn't opened yet officially. The futures jumped. I think they were up almost 700, 800 points. I'm not sure, the Dow futures. But then, not surprisingly, the markets failed even to finish higher yesterday, which is a really, how can I say, sign that people are losing faith and confidence in the Fed. Some people argued that it was because they haven't put this package through Congress yet. I'm not convinced. So the Dow yesterday finished down 582 points, down 3%. S&P just under 3%. So the Fed's big, well, I would say it was more like a nuclear warhead they launched, not a bazooka. This was a nuclear warhead. It failed. But this morning, overnight, the futures is higher. And you read some of the headlines here, like, for example, in the Wall Street Journal, they're trying to make it seem that it's worked. It says here today, U.S. stock index futures and global equities rise after Fed move. No, they didn't rise after the Fed move. The stock market dropped yesterday after the Fed move. This is like complete propaganda by the Wall Street Journal. They're trying to play up the stock market. I'm sure they've been in touch with the U.S. Treasury and the Working Group on Financial Markets, or the PPT, because this is complete, how can I say, misrepresentation of the fact. The stock market didn't rise on the Fed's action. It actually dropped. This morning is a different story. It's probably rising because they've gone in there and intervened, I would say. So, yeah, let's look at where we are. Of course, gold and silver were up massively yesterday. And I think we are on our way to a lot higher levels in gold and silver, especially in US dollars, especially in any other currency. In British pounds, we made an all-time high. We got up to 1360 overnight. Yesterday already we went through 1350. So as you can see in the chart here, gold is going ballistic against the pound, and I expect it to do the same versus the dollar. So right now, spot gold is up another 21 bucks, 1572. The overnight high has been 1585. The low has been 1551. Silver is traded up to 1415. It's off the highs. It's at 1369 right now. Still up 43, 3.25%. I think we need to get back above 14, but silver's looking good. The Dow future is up 880 or 4.8%. So I'm not too convinced about this. I think people are going to take this again as an opportunity to sell. S&P futures is up 110, just under 5%. NASDAQ 100 future is up 4.5%. The currencies are rebounding this morning. The pound is up almost 1%, 116.40. I have to say the technical picture for the pound doesn't look very good. We'll have to see. It looks to me like we're forming a bear flag, and we could go a lot lower versus the dollar. The euro is up 1% as well at 108.35, and the dollar is down 2/3%, versus the yen at 110.56. As I've said many times, the fiat currencies, they just fluctuate up and down versus each other. It's a zero-sum game. I know the dollar's been stronger of late, but the place to be really is precious metals. They're going to rise quicker than any other currency. They're currencies that cannot be, or money that cannot be created out of thin air, like the central bankers do with these fiat currencies. Crude oil is up 5%. WTI is at 25.05, up just over $1. The bond market yesterday, yields dropped again because the Fed announced they're going to be buying Treasuries, so it's not surprising. This morning, the 10-year yield is up 6 basis points at 0.824. So I know there's a lot going on, of course, with this crisis, but don't be distracted. Yesterday was a hugely significant day in terms of monetary history. The day that the Fed said they're just going to do unlimited QE. They're going to print as much money as is necessary, so it's open-ended. And that's where I come to this book, Fiat Money, Inflation in France, by Andrew Dixon White. He's actually, I think, he was one of the founders of Cornell University. He was a president of Cornell University. He was a skull and bones from Yale, but be as it may, this is a very interesting book. So I'll just do a little summary. I'll put a link to a free PDF in the description. You don't have to order it or buy it. I think you can read it for free. You can, of course, buy it if you want. But basically, it's the period in France just after the revolution, or in the beginning of the revolution in 1790. France was in turmoil, of course, the French Revolution. The French state was drowning in debt. The economy wasn't doing well. The French National Assembly reluctantly decided to issue paper money. But even then, this paper money was actually backed. They backed it by the church property that they had confiscated, the property from the nobles that they kicked out, of course, and they backed it by something called the assignats. But there was a lot of debate before doing it. They knew that creating paper money like this, not backed by specie, and by specie I mean gold and silver, always created a lot of problems. They remembered the Mississippi bubble from earlier in that century, how it ruined France, and actually was one of the reasons France was still not doing well almost in 1800. This was 1790. So yeah, they decided to do an issue of assignats. And don't forget, it was backed by church land. And they said, yeah, we're only going to do this amount and that's it. But then the economy picked up a bit, but it didn't last that long. So they kept doing more and more and more. And the economy picked up. They kept doing more and more and more. And every time they did even more. And eventually by 1795 or 96, so it took about 5 to 6 years, faith and confidence in the assignats completely collapsed. And they ended up burning the printing presses in Paris at the Place Vendôme. So that's how it ended. And then they got Napoleon, of course, and they got the Napoleonic Wars as a result. Napoleon, of course, put France back on a sound money footing. I'm not trying to judge Napoleon here. I'm just saying what he did and what happened. So when the Fed and their friends everywhere around the world started money printing in 2008 and 9, I knew it was going to end up like this. Why is it taking longer than it took in France? Well, because back then it was only France that was doing this. Now the whole world is doing it. But I think we're ever closer to where people lose faith and confidence in the dollar and all the other currencies. Are people going to go out and burn the printing presses? Or burn the Fed's computers? Probably not, because we're probably going to be on lockdown when it happens. So that's food for thought for you. As I said, I think this crisis has been overblown, and of course they're using it to kill many birds with one stone. And as Ram Emanuel once said, never let a good crisis go to waste. And I think they're working overtime not to allow this one to go to waste. So if you enjoyed this video, please hit the like button, share it far and wide. Think about subscribing to the channel if you haven't yet. You can also follow me on Twitter, Facebook, BitChute, DTube, and Steemit. I wish you all a great day. Take care. Bye.